Nirmal Jain of IIFL joins in to tell us what he's been doing in such a spectacular market. Hi Nirmal, good afternoon. At what point in the market would you start worrying about valuations, or would you not worry at all, given that this market is now getting re-rated because of how much the texture has changed both globally and locally?
As far as valuations are concerned, I think we should go by individual stocks. So there will, at any point in time, there will be certain stocks that get overvalued, and still you'll find some values. And of course, when the market rises, it will become increasingly difficult to find a larger number of stocks that still offer value. But at this point in time, I think the market sentiment has turned very buoyant with reforms are gathering momentum. The macro developments world over broadly are positive. At least the crude oil is one big problem area for India's fiscal as well as current account deficit. And I think the pace of reforms, which people were worried in the first 3 months of a new government, is also now showing signs of gathering momentum. And so I think things are falling in place. See, market at all-time high is a bit of a misnomer, because one should look at the PE multiples, which are not at all-time high. As earnings keep growing, as we keep moving, obviously markets will have to move up and have all-time high. Like if you have a debt portfolio, then every morning it is new all-time high. So we should look at it with that perspective. It's catching up with the lost growth for a long time. So it doesn't worry me that market is at all-time high, but obviously the values will become a little more difficult as you go along.
Okay, Nirmal, hi, good afternoon. So in that case, what should a retail investor do? Someone who's missed out on the rally and always has the fear that he might be joining at the peak of the market. What should be a good advice? Is it a market which can still be bought?
No, in fact, since the month of January, which is much before the new government came to power, we said that retail investors should now start investing. And even today, even at these levels, if retail investor has not invested in equity, then should build up a portfolio. So when you talk about retail investor, if it's a small investor, then should pick up a good mutual fund. And that's a better way to get into the market, because you can't diversify and have a mix of portfolio which is required to play the market. But if you're a relatively larger investor and can do your own research, have your own advice, then you can still build up a portfolio. But a certain asset allocation must be done to equities. If you're not done it till now, then still it's not too late.
Okay. What is your assessment about what stage of the bull market we are in right now?
Good question, I think. But we are in the early stage. And early stage, the first rise or the first spike is very quick. And then it will consolidate, but it's a long bull market. So unless something unforeseen happens, I think we are into a bull market for at least 5 years. And broadly, Indian markets have moved in 5-6 year cycles. So 2003 to 2008 was one-way bull market. 2008 to 2014 was more or less a bear market. So I think it's the early stage. So the first movement is very quick, very sharp, 25-30% up. Don't worry about it, but I think it's a long bull market, so we still have a long way to go.
Okay. Nirmal, we have seen this morning Bank of Japan also jumping into the fray now and increasing the liquidity. That was really a big surprise move. No one expected that. Do you think that could be the incremental trigger for the market? But at the same point, is there a risk of inflated asset values from here on?
That way India is in a sweet spot, because if you look at most of the emerging markets, then India stands out. Most of the emerging markets, many of them are cursed by the commodity price fall, and China also is growth is slowing down much more dramatically than what people would have expected earlier. So in terms of for equity investors world over, India and USA are two large markets. Other than that, there's very limited opportunity. So I think, and the liquidity is becoming benign now, earlier in the West, now in the East also, in a large economy like Japan, which is a good news from emerging market perspective. Within emerging market, I think India will draw more funds if you look at medium-term perspective.
Okay. Just talking about, some of the stocks which are big beneficiaries of a turnaround in the domestic economy, Nirmal, the likes of L&T, SBI, Maruti, that have seen big buying in the last few days. Where is the most lucrative opportunity now, or does it lie across the board?
See, when the economic growth will gather momentum, banks and financial services, banks in particular, they are proxy for the economic growth. Now, infra also will do well, but I think it will take a while before their quarterly results start showing significant earnings growth. So one is investing with little, maybe at least 1, 2 or 3 year perspective. I think the early beneficiaries to my mind have been financial services sector, auto has picked up very well, and cement. Cement prices and cement demand, they are also looking up, and there the impact on bottom line will be quicker. So if you want to have value and willing to wait for a little longer, then you can look at infra. But if you want to look at earnings growth, giving you support for your portfolio quicker, then I think cement, auto, and maybe IT sector also. IT is a good hedge for currency, as well as the sector is doing well for different regions, because Indian IT company, US is doing well, and that is good for IT sector. So I think these are the sectors that should do well.
Okay. So just to continue that theme, Nirmal, for last 2 or 3 days, we have seen a lot of money go to some of these beaten down mid-cap construction, real estate, very high beta names. Do you think the time has come to give some part of the portfolio to these stocks as well, or would you still be very quality conscious, and would you be advising investments only in the large caps?
See, if you're a trader and want to have a quick opportunity, then you can look at a news-based investment style, like there was FDI increase in, or the talks of FDI increase in construction, then all these stocks rallied. But that would not be a good idea for long-term investor, because long-term investor who doesn't want to, who would at least like to have some stability and long-term approach, should still look at good large cap or quality mid cap names from sectors that have visibility of earnings growth, regardless of policy changes.
Okay. Just to get back to that point you made about retail investors, Nirmal, within mutual fund allocation now, what would be a prudent strategy? Should one stick with a diversified fund, or should you be now a little more aggressive because things are picking up on the ground, and look at some sectoral funds, thematic funds, etc.?
Again, it will depend on the kind of investor that you are and what is your risk profile. So on a 0 to 10, if your risk profile is higher at 8, 9 or 10, then you can take more aggressive approach and pick up sectoral or thematic funds. But for large number of investors, I would say they'll do well to invest in large cap funds or a mid cap fund with a broader market presence rather than just the sectoral themes. And if you're picking up sectoral, then you may take 3, 4 sectors and just not one sector.
Okay. Nirmal, in terms of some of the underperformers, you have stocks like ITC, you have stocks like Bharti, even Hindustan Unilever, and some of the other defensive plays. How would you approach these stocks?
So for a fund, any fund would always be invested in these stocks. What had happened to these stocks, there's 6 years and the economy was not doing well, the market was not doing well, a lot more money got into these stocks, so they got a little over-owned, and their valuations ran up ahead of the growth in earnings. So I think they're correcting. But if you're a real long-term investor, then at least some part of your portfolio you can still have it in FMCG stocks. But within the FMCG pack also, I think if you look at ITC and Hindustan Lever, they might not have performed in the last few weeks, and ITC of course for a little longer time. Because of the cigarette, the negative sentiment and the government policy framework which may go against them. But their stocks like Imami, they have done extremely well. So I think if you're a long-term investor, want to have a diversified portfolio, FMCG is a good sector, and also don't forget that they will benefit from the commodity price correction that is happening now.
Okay.
So you'll see margin expansion in them, in these stocks very soon.
Fair enough. By the way, the Nifty briefly hit that 8,300 mark and is still closer to that level. So 82.91 now, up a handsome 120 odd points. Just one final question then, Nirmal, in the auto space, just wanted your thoughts on whether one should stick with some of the market leaders, names like Maruti, despite the 80-90% run-up we've seen since the start of the year, or should you now get into some of the stocks that have not seen a gain and may play catch-up, names like M&M, etc.?
I would say that, I personally, based on whatever research also has done some work, is Maruti, Hero Honda and Telco. They are good stocks with a different segments, and in case of Telco is outside India also huge exposure. So I think one can, and of course M&M is also good company. But I'm not updated with the valuations and the numbers that they have or what are the projections. But at least I'm sure that Maruti can still do well from here. Company like Hero Honda, they will also do well. And of course, even Bajaj Auto and Telco for that matter.
All right, Nirmal. Thanks for stopping by this afternoon. You have a great weekend. It's going to be a great weekend for many people, many traders on the street. 8,300 on the Nifty is what we've hit. Sudarshan Sukhani, in fact, joins us now. Sudarshan, what a great day. After yesterday's big run-up, we've seen a follow-through on the upside. What does one do on the Nifty now, apart from squaring off your positions if you had long ones?
Well, I think traders should still have intermediate positions on the long side. Others may have been squared up yesterday because it was F&O expiry. But the positions for the intermediate term, for the intermediate trend are intact and they don't have to be squared up, neither for the Nifty nor for the CNX IT or the banks. We will just push up the stops, trail the stops. That needs to be done next week. I think today is the day you can relax. Now, suppose you don't have a position in the Nifty. I think that's much more relevant. Then I would say that after a period of cooling off, it is still worthwhile taking a fresh position.
Okay. So, Sudarshan, good afternoon. What about individual stocks? So, because, you have a lot of large caps gaining 5%, 4 to 5%, HDFC, L&T, you have IDFC. How would you approach these names?
Some of them are still buying opportunities. So like IDFC is just beginning a bull market after a very deep correction. So there is clearly significantly more upside in IDFC as compared to maybe, say, Axis Bank. HDFC is a buying opportunity. I don't know how much more steam it has, but BHEL, which you did not name, BHEL is another opportunity where a new bull market is starting.
Okay. So apart from these names that you just spoke about, any other fresh positions that you'd want to advise for the next 45 minutes? Any closing strategies on individual stocks?
No, I wouldn't do that. 45 minutes is too short a time. But at this point of time, I think IT stocks have more steam. So if you are buying for next week, Infosys and Tech Mahindra are both opportunities.
Okay.
Okay, Sudarshan, what does one do for the November series? Because I'm just looking at the option prices. 8,500 call is already trading close to 50 rupees, and that's 200 points out of money from here. So if you have to trade the Nifty, how do you trade it?
Well, you buy calls. That's my implied volatility is low at this point of time. So which means the calls are reasonably and fairly priced. You buy in the money calls. If you buy, let us say you just buy 8,300 calls at this point of time. There is money to be made on 8,300 calls sometime during November.
Okay. And what do the leaders look like? I mean, in the November series, what's the sense you're getting about who could lead the way? Is it going to continue being financials, capital goods, or do you see some leadership elsewhere as well?
No, I think IT is going to take leadership in November.
Okay.
They've just not finished they've not made the lifetime new highs which banks at the Nifty have done because they did it earlier and they'll do it again. And the oil and gas, that's a sector that is now coming out of a correction. That means ONGC, Reliance, these two leaders.
Okay. Okay. Sudarshan, just two more stocks that have moved up, and forgive me if you've already mentioned them before, but any fresh trades on GAIL, which has suddenly spiked up, and IDFC, which is up 6%?
Well, I just mentioned IDFC and said that this is a stock that's just beginning to move up.
Okay.
I'm not tracking GAIL. I can't give a comment on that.
All right, Sudarshan. We leave it at that. Thanks for joining us. So that's what you can expect in the month of November. The start to the series has been exceptional. And Sudarshan says perhaps IT stocks will now play a catch-up, along with, of course, many of these financial and capital goods stocks that are moving.